Hello and welcome to our webinar today. My name is Tim Bailey from Red Date Technologies. Red Date is the technical architect of the blockchain-based service network, and I'm going to moderate today. The topic is the nature and future of NFTs. NFTs have received a lot of press attention over the last several months. With big, very high prices for some pieces of digital artwork on NFTs, and so there's a lot of interest in the segment. We've brought together today 3 distinguished panelists to talk about NFTs, what they are, what the use cases are. So I'd like to first hand it over to each of our panelists to give a brief introduction of themselves and their background. So let me start with you, Rajesh.
Hello, everyone. Thanks, Tim. Thanks for having me on this particular webinar. I'm Rajesh. I lead the blockchain and the cybersecurity practice for a global IT giant called Tech Mahindra. Tech Mahindra has operations in about 90 countries with about 140,000 employees in different parts of the world. And we do business for about 1,000 global enterprises. My role is primarily to help them internalize blockchain for differentiated services and also to drive digital transformation. That's about me, Tim. Thank you.
David?
Hey, Tim. Thanks for having me, BSN, Tim. I am David Shin. I'm based in Singapore. I work for a company called Kakao, which is Korea's largest platform/software company. Kakao, specifically, I work in their blockchain division. They have a blockchain called Klaytn. My responsibility is the head of global adoption for Klaytn, and I'm thrilled to be here to talk about NFTs. Thanks, Tim.
Great. Duke?
Yeah, I'm the executive chairman of Spores Network. We do 3 things. We're a marketplace that we could say decentralizes pop culture, doing art, entertainment, and GameFi. Secondly, is that we are a GameFi incubator in Launchpad, releasing NFT play-to-earn games. And then thirdly, we are building out a metaverse phase 1, which will be launching at the end of or the middle of this month, which is a VR gallery and retail space. And phase 2 will happen hopefully in 2022.
Great. Thank you. Well, thanks everyone for being here. I think let's start off with the basics of NFT as a technology. I think a lot of people. There's some people on the call here today who understand it. There's some people who the technology is very new and they're joined today to learn about it. Maybe Dave, can I start with you? And I think the challenge I'll issue to each of you is who can give the simplest, clearest definition of NFTs. And David?
Sure. All right. Thanks, Tim. I think let's just start with our traditional analog world that we live in today. We find scarcity in assets such as artwork or, gold or diamonds. And they play different parts in our traditional economy. They're either deflationary assets because there's limits to how much pieces there are, or they create more value because of the scarcity that leads to sometimes sentimental value that gives it financial value, like diamonds, or they could be used for sort of longer term heritage type of use cases where artwork can be created for the benefit of the scarcity of the artwork, and the uniqueness of the artwork can be created for the benefit of society, but also retains value because of that scarcity. So when you translate that to the digital world, it kind of makes sense that we have to develop or look for scarcity in digital assets. And this is where NFTs come in. I always tell Like when I talk to my wife who reads about NFTs, but she doesn't know anything about it, I say, if you think about NFTs in the line of diamonds, the thing about diamonds is that there's actually high grade technology, industrial grade technology, whereby you can create synthetic diamonds, and no one would be able to tell the difference. And so who's to say I'm going to pay X amount of dollars for a VVS1 diamond compared to a synthetic one that is equivalent to a VVS1. And I think the difference here in the real world is that it's the authentication element of it, in a sense that there's a major central party called the GIA that validates and tags and authenticates all these diamonds, which is how it differentiates in value from the synthetic ones that are sold. So it's in that line, if I were to try and explain it in a very simplistic term, I would say NFTs relative to your standard sort of ERC-20 contracts, which are fungible, is really focusing around the scarcity and the ability for the chain, whichever chain it's issued on, to authenticate it. But the beauty of this is that obviously it's decentralized authentication, whereas in the real world we have centralized authentication.
Great. Good. Thank you, Dave. Rajesh, do you want to give your take on that, the definition of NFT?
Yeah, absolutely, Tim. I would like to look back in terms of the trends that we are seeing and how NFTs play an important role with regards to those particular trends, right? So if you look at the people in general, especially the millennials and the digital natives, they're spending more time online and in digital media rather than in the physical media. The fact that they're spending a lot of time in the digital media, like metaverse or anything of that nature, they have to create unique identity for themselves, whether it is their avatar or whether they are assets or whether they are collectibles or holdings which are very specific and exclusive to them. Till NFTs appeared on the horizon, you could have created that, but you wouldn't have been able to establish what I call as your right of ownership, which can be established in a global manner. For example, if you take any digital asset and you want to pay about $500, $1,000 to digital asset, what is the big thing in that? Anybody can copy the fact that it is a digital file, and then it goes through a process wherein people have to go and say that, hey, this leads to a copyright violation, and it's an expensive methodology and expensive process to establish ownership and to establish authenticity. Then comes on the horizon NFTs, in terms of now you can easily say that this particular thing belongs to me, and this is a original digital collectible vis-a-vis a fake digital collectible. And since this has been created with NFT, it has kind of triggered a kind of a frenzy in terms of people paying a premium to basically collect various things. So one, it is definitely going to spawn digital collectible industry, which is going to be a multi-billion-dollar industry globally, number one. And number two, it is also bringing in what I call as monetization to the immersive experiences. Today you have AR, today you have VR, and you're creating identities in the digital space. Take Decentraland, take the avatars, or take the digital fashion in terms of digital tuxedo, digital sneakers, or whatever it is. But there has been an element which has been missing to a great extent, and that element is monetization. AR, VR technology is helping you to create that. The digital technologies are going to help you to create what I call as the network effects and the circular economy. But the monetization piece was missing in that in that engagement model. And with NFTs, you are able to bring in that monetization. So I see a shift from the collection of physical assets to the digital assets, and the trend is only going to grow from here onwards. And it also gives a very good engagement model for brands to engage their customers in a different medium altogether. That's my take on NFTs. Back to you, Tim.
Right, great. Duke, maybe two questions for you, right? Rajesh started to get into the area around AR and VR, which I know you're doing some work in, especially in the gaming space. But if we then take it back up to a high level, and I liked David's story about explaining NFTs to his wife. I'm personally getting ready to go spend some time with my extended family over the holidays, and I'm imagining them asking me some very basic questions around blockchain technology. So let's before you get to the kind of gaming space, Duke, let me ask you a very simple question, which is, if you were explaining to a layperson who asked, well, I've heard about blockchain and it's Bitcoin, so now I've heard about NFTs and that's something new and different. Can you explain to me the difference between those two things, Bitcoin and NFTs?
Yeah, I was gonna say, I'm just gonna do the simplest version possible because I think among this group, I'm in the world of entertainment.
And your answer needs to be entertaining.
Okay, so the human being race is fungible, right? But Duke, Tim, David, and Rajesh are non-fungible. That's it. That's the easiest explanation.
That is quite profound. Quite profound, dude. That's great. So I think what you're saying is, let's take the example of Bitcoin, which is the most famous and well-known cryptocurrency. Each individual Bitcoin is exchangeable with another Bitcoin.
Correct.
In that
like
they each
correct. I mean,
they each
correct. If we do it in business economics term, we know that at one point through Bretton Woods, we got off the gold standard, and every U.S. dollar, you take that U.S. dollar, you go to the U.S. Mint Treasury, and you ask them to replace that U.S. dollar. They will just give you another U.S. dollar, right? So by definition, that's fungible.
Right, they're fungible, exactly, right? So in the case of Bitcoin, if I've got one Bitcoin and you've got one Bitcoin, we could just exchange them. They're fungible. They have the same equivalent value, right? In the case of NFTs, one of the key aspects of NFTs is they're non-fungible. That's the NF in the NFT. And so in that case, an NFT of a particular artwork and an NFT of a particular piece of music would be unique and non-fungible, or they would have a intrinsically different value from another, right? And I think for me that's the key difference, right?
Correct. And again, in the analogy I use, Duke and Tim are totally different human beings.
We're not equally exchangeable. Correct.
We're not equally exchangeable, sadly.
Right.
Wonderfully.
Right. Okay, good. So let's with that out of the way, I'd like to hear you talk a little bit about, again, building off of what Rajesh said around gaming and the creation of assets in the virtual world. Tell us a bit about what you're doing in that space.
Yeah, I think we're bridging two sides, really. We're looking at NFT art and NFT entertainment assets, which very much means collectibles, right? And we started out in saying with these assets is, here's a famous artist, here's a famous celebrity, they're going to put out a token, they're going to put out a special NFT item. Is it of any intrinsic value? Don't know. Is it of any tradable value? Clearly, right? And so, as in the world of high art, I was just at Art Basel, Miami this past week. Every art is worth what someone else is willing to pay for it, right? And that's the motto since the day we started painting in caves. It's simply what the next guy was willing to pay for it. Where it moves into gaming and the metaverse is, I would say, the inclusion of utility. Right. It is that now this piece of art, and I was rewatching Ready Player One, and there was a scene where the main character was getting ready for his date. And by getting ready for his date, he put on I think it was like a Marty McFly outfit. And then he put on a Michael Jackson Beat It outfit, things that he'd bought in his toolbox of outfits. And to extrapolate that, he probably paid money to buy those NFTs. Maybe it's not a one of one, maybe it's a one of 1,000 that his ecosystem allowed him to buy. And so that creates utility, and that creates an additional value. So we are moving towards, it seems, within the art groups, the entertainment groups, the PFP groups, the generative art groups, we are moving towards some level of utility, but it varies depending on which of those subgroups you're dealing with. Whereas, like, for example, I was lucky enough to be invited to a Ferocious art paint party, right? And the ticket in was you had to have a piece by Ferocious, right? So that was you bought the NFT. What was interesting was the circular, right? You bought the NFT, which allowed you to access to his paint party, which was to create new NFTs from physical art that was being done live by 50 people. So it's that's the fine art world. And then on the other side of it is the metaverse plays, where it's Decentraland or Sandbox or the myriad of other game places that are coming up. Is okay, if I buy your land, if I buy your in-game transport, what do I get in utility? Is it a cash flow stream if it pertains to land, or is it a utility because of game use if it pertains to transport, weapons, character swag, etc.?
Good. Why? A general question, and maybe I'll start with David on this, is NFTs have gotten an incredible amount of press, even in the mainstream press, in the last several months, and particularly around art. And we all know the famous case of the Beeple, the artist who produced art that sold for $69 million US. So I guess, Dave, a question to you is, why do you think NFTs have become such a big deal in the last several months?
It's just a continuation of the broader acceptance of digital assets, I think. One thing we have to timeline here is we tend to think continually that in our parents' generation of how we look at investments, right, which is real estate, securities, whether they're bonds or equities. But we've got to understand that the millennial generation and below, the Gen Z and whatnot, which, they're all in their 30s and 20s now. So they're earning capital, they're earning money, and they're looking to invest. I assure you, they're not going to put money into real estate or bonds or even equities. It's all going to be in the space. So that acceptance is moving along the time continuum because they're turning 20s, 30s, and eventually 40s. And so that's what we're seeing, I think, is this crescendo of these new investors who actually now have money because they're working and, they're looking to invest in a different space. So that I think it's the adoption curve just moving up. I also think that the way that this new millennial, Gen Z, and below generation look at value is quite different. We see value as more of an accreted. We see assets accrete over time, and we believe that gives value typically. That's really sort of our parents' generation. I think my generation, in my mid 40s, we then kind of took that to another level, and we said, yes, there is that aspect of it, but there's also something called volatility where we can make money when things go up and down. With these guys, I think you combine that, but you also combine the ability to trade 24/7 markets, which I think they like, markets that are fast moving and things that have a lot of liquidity. And so when you throw all these things in, it really starts, you get into a situation, I think, where people are looking more at the crypto market. They're looking more at digital assets. And so it doesn't surprise me that we're seeing higher demand. The one aspect I will footnote, I should say, that I would add just before we move on, is that I think, in my eyes, I see, a difference in terms of the fungible, let's call them Ethereum, Bitcoin type assets to NFTs, in that, looking at them, there is perception plays a strong perception plays a strong role in value when it comes to NFTs, along with demand. And I believe that's where you end up with the strike price of what, a collectible or piece of digital art is at a very high level. Whereas with Bitcoin, I think, and Ethereum, it's really more around utility and liquidity. Right. So those aspects and demand, obviously demand is in every market, is always going to be a market player, right, in terms of valuation. But I think if you break it down to the simplest form for someone to understand how do these things get valued, you have to kind of look at it for the basic components. So perception is key here, right? So how the younger sort of Gen Z generation perceive digital art compared to how they perceive the Van Goghs of the world. It's pretty clear they're willing to pay up for the digital, right? My parents would never. And really, what makes that difference? It's the perception of how they value these things. So I thought that would be interesting to add there as a footnote, Tim.
I would also say...
Sorry, go ahead, dude.
No, I would say that as an extension to perception, because actually we are working with like top of the line, traditional artists and moving them into crypto. And I've been asking us, like, what exactly is the difference? And in a nutshell, I said community is that, in the same way that you just said it, David, is that for these artists who are in their 40s or greater and have done sales on multiple, traditional marketplaces and are very comfortable in where they are, they don't understand how community affects the prices for them. I.e., if they sell on Pace Gallery, then again the price is determined by Pace, and then maybe 10, maybe even only 5 other galleries, in the world who trade in that market. Same thing as if you're doing it with Sotheby's, but in the NFT market, where these artists are coming up quite young, all these movements, whether it's altcoins or now NFTs, some people like to equate NFTs to the sort of ICO altcoin era, is that community drives that perception. How strong your community is going to be is going to define value. In our, maybe the 4 of us are in relatively the same age range, in the sense that when we grew up, we were taught that we should be exceptional within a group, right? We should stand out, and by standing out, we will win. And this generation, the generation that was brought up to do a lot of community service, right, as a way to stand out, they're coming in and saying, no, if we're part of a collective, we're part of a community, we're a strength in numbers, and that we will define value, irrespective. We create the market, Wall Street bets, right? We can create the market. And we're seeing that in the NFT space right now.
Very true. Very true. Rajesh, I want to shift it over to you a bit. You're leading the blockchain effort for a global giant like Tech Mahindra, and you work with other large, Fortune 500 and multinational companies to help support their operations. So, whereas I think David and Duke are more working kind of on the leading edge in some of the faster moving parts of the industry, you're probably working with some older established companies. Can you tell us a little bit about how you see NFT technology being used either now or in the future with some of the large clients that you work with?
Sure, Tim. In fact, we'll be fascinated to know in terms of the rate of adoption. For example, if you look at Visa has bought a collection from the CryptoPunk by paying about $100,000 just to make a statement that they are not behind this particular, revolution or the new technology or the game-changing technology, and they put it in a Visa digital archive. We've heard about NBA Top Shots doing a lot of stuff in the NFT, but we have also heard about brands like Budweiser and the several other brands which are getting onto this particular bandwagon, primarily to create a connect with the younger set of customers, the new millennial customers, because they get influenced in a different manner, as Duke had just mentioned, and they don't want to left out in that particular segment. So we're seeing a lot of traction. There is a heightened interest from a global brand's perspective. For instance, we've had conversations with some of the people who are the global leaders in the publishing space. They have a lot of archives, and they are wondering in terms of can they convert those archives into NFT assets, and they can monetize and create a different level of engagement with the end customers. There have been even players in the agricultural world. For instance, they want to look at NFT. In fact, one of the leading player in the agricultural world wanted to do a differentiated send-off to the chairman. The chairman will be superannuating soon, and they wanted to bring out exclusive collection of NFTs in his particular honor. So it's quite fascinating to see in terms of the diversity of thoughts that are coming from these established players. Yeah, they are 1,000-pound gorillas, but doesn't mean that they have lost out on their swiftness and nimbleness. They are as swift and as nimble as the startup world is.
But do you find, Rajesh, that again, as a partner for a lot of these large companies, are you more pushing them into the space and teaching them about NFTs, or are you being pulled into it by them? What's the dynamic like for you?
Yeah, it's a good question, Tim. So it is a combination of both push and pull. In some cases, it's more of consultative in nature. Basically, somebody comes and tells us, hey, our net promoter scores are going down from a customer engagement perspective. We've tried many things. Is there something that we can do from a differentiated perspective when it comes to customer centricity and a customer experience? So it starts with that kind of a consultative engagement. In other cases, they come and tell us, you know what, our competitor has been thinking about this. A little birdie tells us that these are the initiatives that are going on. From their innovation department perspective or from their customer engagement perspective, what is that we can do? In some cases, we go and say that after we have seen in terms of their awareness levels and their maturity levels from an adoption of a new tech like blockchain, where they have internalized blockchain purely from a B2B perspective, there is an opportunity to do it from a B2C perspective. So that's where we go and give them some ideas. We spawn some ideas for them. So it's basically a combination of push and pull without one superseding the other.
Interesting. Okay. And do you, and this is really a question for any of the three of you. I think you're all well involved in the technology. You're all seeing it starting to be used in new industries, in new verticals. Are there industries today where you look at and you say, look, there's NFT is not being used at all, but this could be a game-changing technology for that industry? Open question. Anyone can take it.
We're actually working on a project within the music space. And I think that's quite interesting. And it's not just, it will be with a celebrity, but it won't be just, mint some NFTs and be done with it. So I think music, NFTs, the ability to fractionalize the income stream and finance new music, musicians, music labels is actually really interesting. And it may be a situation where the tech goes, ahead of the legal framework. So the example would, I believe Justin Freelau sold one of his songs, 50% of one of his songs as an NFT, so that they basically, anyone who bought that NFT would share a portion of that song's revenue in perpetuity, right? And so I think that's a very interesting use case and allows not just for like a popular artist like Freelau or the one that we're going to launch, but even independents being able to say, hey, we're going to, Kickstarter an album. And if you guys help support the production of that album for X amount of dollars, then that portion or a portion of that portion becomes the equity that you would receive in token distribution. So I think that should come up soon.
So Duke, you brought up a term there that I'd like to have you explain a bit more, which is fractionalization, which is a unique aspect of NFTs. Can you explain that a bit more and what doors that opens up in terms of business models?
I mean, it really, fractionalization is just derivatives, right? You have a stock, and then the stock is priced at a certain level that maybe is too high for the average consumer to pay for. Berkshire Hathaway shares, for example, and then you want to fractionalize it in a derivative, and you want to sell that derivative, which allows for a lot more liquidity in the market. So take an example: if you were to buy, one of the Bored Apes right now, right? I can't remember what their floor is, but I assume their floor is maybe 200,000-300,000 US for the cheapest one, and multi-millions for the highest one. Let's say you had a $15 million Bored Ape that you had in your possession. One, you could then fractionalize that into little shares that people can buy and trade with and monetize. Two, you can actually fractionalize to basically allow for yourself to have a lending mechanism so that you can have that asset but still lend it out and make cash flow on it. So there's a couple, I believe NFC 20 is trying to do baskets of fractionalized baskets of NFTs, like a basket of Bored Apes. And you're able to lend or provide utility on that.
Great, thank you, David. I'd like to, you're part of the Kakao organization, and Kakao has its hands in many different businesses and sectors. Could you talk a little bit about what you're seeing with NFTs in the areas that you're working on?
Yeah. Can you guys hear me okay?
Yep.
Okay, good. Yeah, so in Kakao and Klaytn, it's really exciting actually. There's what we're seeing, and then there's our vision of where we would like to push this. So what we're seeing is every meeting, every conversation we're having with any large enterprise, all they want to talk about is metaverse. I just came back from a weeks-long trip into Korea. And I mean, whether it's the LGs of the world or the Microsofts or what have you, all they want to talk about is metaverse. And so that's really exciting. I think the residual benefit of that will ultimately fall on NFTs as the metaverse economy grows, NFT demand will grow. In terms of where the vision of, Klaytn and how I kind of see this moving forward for us, it really starts at the gaming level, because metaverse, we throw this word around and people are like, well, what is this, right? And then they'll do something like, well, have you seen Ready Player One? They're like, yeah, okay, well, it's a game, right? So at the end of the day, metaverse really is about, a multiplayer, interactive environment where it can be a game, but it can also be other things. And this is, I think, the differentiation that people don't really do in talking about the metaverse. It can be an event. La Liga could be holding a metaverse event for, for their fans to interact with players. It could be a concert, right? So, I remember several months ago when my youngest boy was playing, who loves playing Roblox, asked me to come and join the KS1 event where he was having a concert on Roblox. So, Travis Scott did one on Fortnite. So these are all things where we're blending different industries together, and it's all kind of meeting at the metaverse. So with that, the way that Klaytn sees this is that, when you have this kind of environment, it's only going to thrive and evolve if you can create an economy, and that economy has to enable those multi-players or multi-users who come on to be able to transact peer-to-peer, whether it's C2C, B2C, B2B. These transactions need to be developed and they need to happen. I think this is how metaverse will thrive to the next level. And in between all that, it will be some combination of fungible and non-fungible assets. So really what I'm saying is blockchain is pivotal as an engine for driving this economy. To go into more detail, for us, we see NFTs not just as your typical sort of digital art pieces or collectibles. We see them in so many different use cases. We actually, from a gaming and metaverse perspective, we see NFTs as avatars, okay? Because each of us as a digital twin is represented in a unique form through an NFT. And with this new technology called dynamic NFT coming through, where NFTs can change shape and color and whatnot, we're really excited about where that's going. And we think that'll really be more applicable towards avatars than it will be towards, let's say, collectibles or digital art. In addition to that, what we see is interoperability of NFTs throughout different chains, and ultimately being able to use NFTs as collateral in DeFi platforms so that you can not only play a game and earn, but you can now take out an NFT asset in game, out on chain, and then collaterally stake that in a pool and earn yield while you're not playing. So we see this opportunity for a dual monetization model. And it's very, very possible because we're so close to the convergence of DeFi with so many other different use cases. And I think metaverse is just going to be a natural segue.
Got it. Great. Thanks, Dave. Let's shift a little bit to talk about regulation. So, typically when you have new technologies that come out, the regulatory environment or the regulatory bodies tend to lag behind the new technologies. But I think particularly with NFTs, regulation becomes important because NFTs are essentially unique tokenized versions of assets. And some would argue, they're securities, right? Which are heavily regulated in most jurisdictions. So I'd like to get your view on the regulatory environment, maybe starting with you, Rajesh, as you're talking to, your big clients. What are they asking about the regulatory environment, and what do you see happening with regulation around NFTs?
Sure, Tim. So the first question that I get is, hey, I invest $1,000, $2,000 in an NFT, and how do I prevent other people from copying whatever I have? And what is the regulation which is there? And what happens if I lose it, or what happens, somebody steals it, or, these are the questions that keep coming up. And unfortunately, most of the regulatory aspects are silent. Today, the courts of law don't recognize these kind of assets and these kind of engagement models or the business models. So what happens is, if somebody is investing in an expensive digital collectible or a crypto collectible, the best practice that is being proposed by people is in terms of how you would go and secure your physical assets. By registering them, you would go and use the same kind of mechanism for these digital assets as well. And that's where it becomes in terms of a little, not so elegant. You're talking about a digital engagement, and then you're bringing in the physical component into it. So the regulation needs to emerge. And it is not just the regional regulation, but it needs to be a global regulation, because NFT is not confined to a particular geography per se, right? And it is on the ether world, and ether world is all pervasive. So how do you bring that global regulation while you're safeguarding the interests from a regional perspective? So a lot is yet to evolve. And as you know, many countries are still debating whether to encourage cryptocurrencies or to whether to discourage cryptocurrencies. There are many countries which are like a cat on the wall. We don't know which way they're going to jump. So a lot of facilitative environment needs to be brought into place, first with the cryptocurrencies, the second with the blockchain technology, and third with the crypto assets. And once you have the hotbed or the rock bed of these kind of regulatory framework, then you can talk about the regulatory framework for NFT. So it's a completely white space and a blue ocean area. A lot needs to be done in this particular space.
Do you think regulation is important for the mass adoption of NFT as a technology, or do you think that it's just going to happen anyway without any type of regulation?
I mean, that question is very straightforward. I think that regulation is always good. It creates room to monetize. It doesn't restrict room to monetize. We see that in financial markets all the time. We see that in goods markets all the time. When you create basic frameworks, you avoid monopolies. You avoid oligopolistic behavior. You do a lot of things that allow for free trade. So is regulation coming, especially in the States? Obviously, it's coming. And is it good? It's definitely good. A more pertinent question for me is an NFT a security? And so I would particularly answer that with the answer that we've already said that it's not, because it's non-fungible, and generally securities are fungible. The moment it becomes non-fungible, it's like baseball cards. Are they securities? Is a Picasso a security? Well, the SEC has defined both asset classes as not securities. Now, if then the NFT poops tokens, right, that becomes a slightly grayer area, right? I.e., your cyberkongs who print out the Genesis projects, like cyberkongs who print out 10 bananas a day, or 10, which is a token. Does that, then create a situation where your asset is linked to a possible security? That's a bit of a grayer area, and it's something that the governing power is going to have to decide.
Got it. So a final question that I'd like to pose to each of you. I think when we think back to one of the last big technology waves, the internet, so in the 1990s, and I know it was it was a big moment that I knew that the internet had really gone mainstream. Was the first time my mother sent an email, right? And then the first time my father bought a book on Amazon. It was kind of this watershed moment where I knew that this was truly mainstream technology. When do you think we'll be there with NFTs, David?
Really good question. For me, I think we will get there, that watershed moment of mass adoption, when we have, I think, more marketplaces that can be sort of trusted and regulated. Crypto is still a very scary place for a lot of people. Email wasn't at that time because it was backed by, you either had a Yahoo account or a Hotmail account. So you had a central counterparty that you were taking risk with when you were sending your information. Here, you just don't recognize any of the players, and you read all the spook stories. So I think it does tie back to the earlier question around regulation. I think we'll get more adoption as we have trusted entities coming forth and saying, you can trust the Coinbase NFT market, or, you can trust OpenSea because we believe that, they are doing all the appropriate KYCs before people open accounts, and, they're working with the right exchanges to be able to exchange fungible for non-fungible tokens. And so, to me, that I think when that happens, we'll see more adoption coming. I kind of relate that back to crypto trading. Really, when you think about when the sort of the needle flipped, it was when the likes of the Coinbases, the likes of the crypto.coms were becoming more mainstream, and the regulators weren't threatening them. You were seeing more net positive news about crypto. So all these different things, I think, have to start happening around the NFT space before people start doing coming to the table more.
So I'm just thinking a little bit about the irony of your statement, which is to play it back to you. When we have trusted centralized organizations, then this decentralized technology will start to be trusted by the masses, which is an interesting statement.
It is very interesting, and when you play it back, it sounds awkward, but the reality, right? I mean, let's take off our Bitcoin hoodies for a moment and think about the reality of mass adoption, right? We're talking about your parents, my aunts and uncles, people who are in, rural parts potentially of markets that are developing. I just don't believe that there are people that are going to stand up and jump into this right away, unless they're laggards essentially. And a lot of laggards are really waiting for some signal to come into the market, whether they're pushed by government or because they feel that it's a safer opportunity in the market, or whether because there's trusted entities, right? So I do think, sadly, my thesis has always been decentralization is actually leading to centralization 2.0. And that's always been my thesis. And I believe we're going to continue to go down that path because it's such a great disruptive technology that I believe the centralized organizations feel that they need to be a part of and they need some oversight on.
Just to add to what David had said, Tim, I tend to agree. If you look at the Ubers of the world and if you look at the Airbnbs of the world, they did drive the digital transformation, but ultimately they came in as intermediaries to drive that particular digital transformation, right? And also the ecosystem and the network effects that we always talk about in the blockchain world. So we already have seen it happening in the other areas. So the trusted intermediary is going to be there to promote adoption of blockchain for a long, long time.
But you do agree, though, that you have to agree that the original vision around blockchain technology was to eliminate
Absolutely.
intermediaries that you needed to trust, right? And it's almost as if you're saying, well, we're going to eliminate some of the existing legacy intermediaries, but there will need to be new ones that take their place.
Or it's the magnitude of the role. It is going to diminish. So if you see the traditional physical models, they have a much larger role to play. But if you take the new age digital models, there are intermediaries, but their role is becoming very, very marginal, and it is becoming inconspicuous. And it's a continuous journey where it becomes truly, decentralized and truly without any intermediary party in between.
Yeah, one thing to footnote there as well, just off the back of what Rajesh is saying. Not to bring in any sort of religious aspect to this, but I find sometimes referencing stories from the Old Testament quite interesting. So there's a story in the Old Testament about the Tower of Babel. And people used to say to me, it was Satoshi Nakamoto who was able to figure out the Byzantine general's problem and implement it into the world. No one had done it before. But if you actually think about it and you assume there's some truth to the Old Testament, I mean, 70-80% of the world believe it, right? Muslims, Jews, Christians, and Catholics. If you assume that, the Tower of Babel is actually when consensus first happened, right? Because as the story goes, mankind all spoke the same language at that time. They were all incentivized to do the same thing, which was build this tower to get to God. But the moral of that story, and why I bring this up is, as a reference, is even the authority, in that case, God, thought that this was too powerful of a model. And he, as the story goes, he destroyed it. And he fragmented people around the world to speak different languages and cultures, which is why we are here today, to ensure that that never happens again. So let's bring it back to our conversation. What we know then is that the consensus model is extremely powerful. And if it's given free form and free reign, and it's going in the wrong direction, I think it could really screw humanity up. And that's why having intermediaries that are trusted, I believe, in the conscience of people is important. And in my mind, it's also important, especially in the nascent stages, because if this just takes off and it goes sort of lemming effect in the wrong way, I just think that it would cause more problems than benefits.
Great thought, David. Duke, I'll give you the last word on this.
I don't know. I think I'm a venture builder. And so I think it's just very funny because as David, you were talking about it, I was actually wrestling with it, going exactly what do I say? It's centralization 2.0, which I could see an argument for, or do I see decentralization? And I was actually doing a pitch deck for our VC fund, and I explained one of the slides was actually for normal people to explain Web 3.0 was like, okay, Web 1.0 was your Cambrian moment for the internet. Web 2.0 was the moment everything centralized to your Facebooks, your WeChats of the world. And now we're in desperate need to decentralize, to retain privacy, to retain our own data, and to be truly trustless in our transactions. And I think that crypto natives, enjoy that trustlessness. I don't, a perfect example was when I first founded the company with my co-founder, we had to fund the company, right? And so we were trying to transfer money back left and right. And I just said, hey, my co-founder was like, I need about 100K I said, I need 100K from you in Bitcoin. And he goes, let me ship it to you right now. He did it, of course, on Binance. He did it, of course, in about 5 minutes. Right. It took me then 3 weeks to do the same exercise through HSBC. I'm just going to go ahead and name one of the banks. Right. And I kept on asking myself, I'm like, what is going on? Like, why are, I've already KYC'd, actually. It's my bank, it's my account, right? I'm sending it to a proper account. And yet it's taken, 3 weeks plus instead of 5 minutes. I think that, therefore, I think I'm going to say decentralization will come. I think it will come when we can actually be private in our identities, and we can actually control our funds privately, right? That no one has true access to our digital currency or our fiat. Once that happens, I don't need institutions to verify me. My account is my account. You can look at my account and I'm rich or poor and can transact, and you don't need my identity to know that you can transact. Now, could that be very far away? Maybe the intermediary step is centralized institutions coming in with solutions that are semi-trusted. In fact, I think Binance did a version of that, right? That allows it to exist. But I think Elon Musk said it today, right? You all shouldn't be on Coinbase. You shouldn't be on Binance. It's not decentralized, So I'm being a devil's advocate. I don't necessarily completely believe in that advocacy, but I have to say that if I'm a purist looking at what the mission was, which is to get from centralization to decentralization and pulling back my identity from all of these data banks, then that's that next moment. I don't know when that's going to come. I don't know if that's your mom emailing. I don't know what that instance of your mom emailing is in the next 10 years, but there's got to be an event like that, Like there's a by the way, there's a hot new protocol, Ohm, as some of you probably might know. Also, a version of it is Wonderland, right? And the essence of both algorithms is to decouple, because currently we're officially coupled to fiat through Tether, right? USDT, USDC. So there's some level of fiat that's still attached to allow the economy to move. But Ohm and Wonderland actually are creating a centralized or decentralized currency that is backed by a basket of currencies, just like the US dollar is backed by the US dollar. And if this works as a software mechanism, I mean, that's it. You don't need governments anymore. You literally have software powering, undergirthing, the true value of all the digital currencies. And if you look at the white papers of those two projects, it's pretty captivating. Especially if they can do it, if their Janet Powell can be a DAO, can be a republic, maybe not a democracy, but at least a republic, it becomes quite interesting.
Hey, Duke, thanks. Great. I think we have the topic for our next webinar, Centralization 2.0 from David. But I want to thank all of you for joining the conversation today. A lot of good thoughts, a lot of good ideas. Thank you, David. Thank you, Rajesh. Thank you, Duke. And look forward to talking with each of you next time.
Thanks a lot, guys.
Thank you, guys. Stay safe. Bye for now.
Bye-bye.